Good afternoon, friends. It's a pleasure to welcome you all to this session on HDFC Innovation Fund, a fund investing in future today. India stands at a truly exciting juncture. In less than a decade, we have climbed from 81st to 39th position in the Global Innovation Index. That's not progress, that's transformation. We are now the third largest startup ecosystem in the world, with over 1 lakh government recognized startups and over 100 unicorns leading across the industries from fintech to green energy, from health tech to mobility. Innovation today is no longer confined to laboratories or boardrooms. It is happening on our roads through electric vehicles, in our homes through digital payments, in our skies through indigenous defense technologies. It is reshaping how India creates, connects, and competes. We are also witnessing a new age IPOs as young and innovative companies build around digital platforms, new business models, technology enabled services are stepping out from the private domain to the public markets, which also brings fresh capital, public scrutiny, and of course, large scale opportunities to India's innovation economy. Against this backdrop, we want to discuss our innovation fund today. You would all remember that we introduced our fund about 2 months back, and today the portfolio is fully invested. With us today, we have Mr. Amit Sinha, who is the fund manager for HDFC Innovation Fund. With his deep experience and market insight, he will share how the fund aims to participate in India's growth powered by innovation.
Yeah, hi. Thank you, Sandeep. And hi, a very good afternoon to everyone who joined the call. So, as you all are aware, we launched the fund in July of this year. And we have invested, we are fully invested in the fund. A lot of you would have heard me during the NFO. So, this call is focused at kind of giving you an update on basically the investments, how where all we have invested, and also reinforcing the thesis that the areas in which we are investing, and the areas in which the fund is basically trying to look at the opportunities. They remain very large. Over a period of time, that will be the key areas to kind of look at from any fund perspective. So with that note, let me start the presentation. So, broadly, we are, the fund aims to invest in set of companies where the companies are over-indexed in terms of the R&D spends, where the companies are, basically investing into products, processes, or business models which are innovative. And based on that, these companies are gaining market share and are growing ahead of the industry, and which is also kind of helping them to kind of increase or grow their earnings ahead of the overall industry where they exist. Just to set the context, innovation are broadly of three types. And The first one is product innovation, where there are three subtypes, namely radical, disruptive, and incremental. When we are talking about radical innovation, we are talking about innovation which is again very radical in nature and which has not existed before. Something like Google search engine, when it came, it was a completely radical concept, and there was no kind of search engine which existed before. Similarly, if when we are talking about disruptive innovation, some of the examples can be something like iPhone, which was not the first mobile phone, but when iPhone came, it kind of disrupted the entire market, combining the normal mobile phone with internet. And similarly, something like an Uber, etc., are also examples of disruptive innovation. Lastly, basically incremental is again different version of one product, and they are not disruptive in nature, but only kind of adding a layer of innovation on the top of it. When we talk about process innovation here, the companies, they kind of use unique capabilities of function, to kind of create cost or quality advantages. One of the major examples of process innovation is the lean manufacturing in automobiles in Japan in 1960s and 70s, where they innovated to come out with cars which were significantly cost leaders, which were kind of cost leaders, and they gained market share meaningfully over the next few decades. Lastly, business model innovation are basically a form of innovation where the companies, they challenge the conventional wisdom, and they kind of come up with new revenue models and new cost structures to kind of come with a completely different business model, which kind of help them to gain market share. Here the examples are the fintech players in India, who came up with completely different business model and disrupted the market. Moving on, in the next few slides, I'll talk about few of the innovation in the Indian context. To start with, if you look at the slide at the top, is kind of top right hand side chart, talks about the top two fintech broking platforms, and the kind of market share gains which they have seen in the last 5 years. And basically these platforms were non-existent before 2014-15. So almost 40% kind of a market share has been kind of gained by these two top fintech broking platforms in the last 10 years. And one of the main reason for the market share gain was a different business model, where they came with a fixed broking model, fixed price broking model, rather than commission based broking model, and which helped them to gain market share. Similarly, the leading insurance tech player, the chart on the bottom right hand side chart, they also gained market share by using a different business model, and developing a platform which was superior in terms of the overall tech, and they gained market share in terms of the premiums over the last 5 7 years. Moving on, if you look at in the financial services, again in the banking side, the physical channel transactions have come down dramatically. This has not only helped the, in terms of the ease of the transaction, but has also helped to reduce the cost structures of the banks dramatically over the last few years. And also on the right hand side, if you look at the the number of UPI transactions have gone up significantly. The overall online transactions have been kind of going northwards in a meaningful way. This example is talking mainly on the quick commerce side. Now, retail as a category has been existing over multiple decades, but quick commerce came in and disrupted the way in which kind of retail business model operated earlier. And now they are growing at a significant pace, and it is expected that in the next 3 to 5 years the category will become very, very large. And this is another example of business model innovation. Similarly, in autos, and this is one example which clearly demonstrates that innovation is not limited to tech. The incremental innovation in terms of the superior designs is there across all the sectors. And here we have put in an example of a company in automobile side in India, which has gained market share in the last 5 years because of their superior design, which they introduced in the last 5 years. And lastly, talking about the defense sector, again, if you look at the two pictures. On the left hand side, the picture is of US Apache, which is a light combat helicopter which we used to import earlier. And on the right hand side is the picture of India's indigenously developed light combat helicopter Prachand. I think the key point to highlight out here is that the cost of developing the indigenously produced, basically developed aircraft, light combat aircraft in India is half of the cost of US Apache's import. And not only the cost is half, but also some of the parameters like service ceiling, which is a very important parameter, in especially in the terrains where this helicopter is used, in the hilly terrains, where service ceiling becomes a very important parameter. That also for Prachand is superior compared to Apache. So I think what the example demonstrates, that because of the sustained R&D over the last many years, the defense ecosystem in India is able to produce indigenously platforms which are not only cheaper but are more suited for Indian and our defense requirements. And that is something which is very important. Now moving on, I think historically, innovation has been important from an overall economic prosperity and market leadership point of view. And in this, slide, we have given examples of how different countries, in few, in respective decades, they demonstrated superior technologies, and because of that, they have been able to kind of grow in terms of the real GDP in a significant way, and much ahead of the overall global growth. So the first example, and US, as we are all aware, US exceptionalism is something which we all talk about, but I think US exceptionalism is nothing but their ability to come up with innovative platforms and the ability to invest into R&D time and again, and that has led them to become the largest economy in the world. And here we are giving example between 19 in the era of 1980s and 1990s, where in the areas of information technology and in the healthcare technology, US came out with multiple innovation in the field of personal computing, in the field of internet, e-commerce, and in biotechnology, and other pharmaceutical kind of developments. And because of that, their growth was very superior during that period. Similarly, what we have seen in the last 20-25 years, China, which is, if you look at Chinese GDP growth between in the last 25-30 years, it has nothing, it is nothing short of economic miracle. Such a large size country has been able to grow at almost close to around 8 to 10% for almost 20-25 years. A large part of that growth after their manufacturing success was also because of the innovation. And if you look at in the last 15 years specifically, China has been able to innovate, not only in the EV technology where they are market leaders, but has been also been innovating on the 5G technology, AI, and the overall smartphone manufacturing. Similarly, between 50s and 60s, Japan again was a major manufacturing, was a major innovation hub. They came out, they were, one of the examples which I kind of gave early on in the presentation was on the lean manufacturing, lean, kind of manufacturing in automobiles. And that was one of the process innovation which Japan introduced during 60s, in the car side, and they gained a lot of market share in cars. Similarly, there were multiple innovation in the consumer electronics side and in the high quality steel production in Japan. And lastly, South Korea also came out, with innovation in the semiconductor industry, in the industrials, shipbuilding side, and in the consumer discretionary side in the 80s and 90s, with which helped their economy. If you look at the growth rate, real GDP growth rate between 80s and 90s in South Korea and in Japan, they grew almost close to around 10% during the phase when the economy was innovating. So in nutshell, it is very important from an economy point of view to kind of keep on investing into products, processes, keep on investing into R&D, which will keep the economy ahead and to kind of help the economy to grow ahead of the rest of the world. Another important part from an innovation point of view is that the length of cycles of innovation is now shrinking, and that is making the adaptation very, very important. So one of the clear examples of how the innovation cycle is shrinking is in the top 10 companies of S&P 500. And if you look at none of the top 10 companies which in during the 90s are there in the top 10 today, which clearly demonstrates the fact that for a company to maintain the leadership, they continuously need to innovate, and incrementally, the companies which are innovative, they have been able to grow faster and have been able to maintain the market leadership over the years. And also, this is an example of, if you look at the last 20 years, a major part of the wealth creation across the world, not only in US but also in China, has been there in the companies which were kind of innovative companies, and hence it is important to look at a portfolio, or look at the set of companies which keep on kind of innovating, and kind of, we as an investor, it is important for us to invest in those companies. Uh, Similarly, again, the higher adoption of these technologies, the innovative technologies, depend on the lower cost, and ultimately the unit economics matter. So here there are two examples. One in the lithium iron battery side, the adoption of the technology went up significantly once the cost came down. Similarly, the solar module cost coming down led to higher adoption of the technology. In terms of the wealth effect itself, as we always point out the fact that, at the end of the day, the market is driven by the earnings. And if you look at in the comparison of the earnings growth of the Magnificent Seven, I mean, these are the top seven companies, the top tech companies in US today, versus the S&P 500 in the last 20 years. The earnings growth of Magnificent Seven companies was at 48 times, compared to the three times earning growth which was demonstrated by the overall index. And that was one of the key reason why these companies, they grew so big in size. And the outperformance of these companies, as we all are aware, was not only because of the narrative, but mainly because of the earnings growth which these companies generated over the long period of time. And similarly, if you look at the US, tech industry versus US energy industry, the performance has the difference in the performance has been stark over the last many years, almost 3 decades. Similar is the case in China, where the tech index has done significantly better compared to the energy index. And innovation is not limited only to the technology sector, but this example is, that we have given various examples in different industries. For example, in automobiles, Tesla has grown significantly ahead of the automobile index in US. Similarly, in media and entertainment, Netflix has done significantly better compared to the traditional companies. And in pharma also, AstraZeneca has done significantly better compared to the respective country index in the last 20 years. In If you look at even in India, the sunrise sectors have grown disproportionately in various period of time. So between 2000 to 2007, telecommunication was a sunrise sector, and there the weight of telecommunication sector in the index went up significantly. Similarly, the information technology between 95 to 2005 10 grew significantly in terms of the index weight. And in the last 5 years or so, in the Nifty 500, we are seeing some of the new age companies kind of growing significantly in terms of the weight. Mainly because of, again, some of these newer companies are becoming larger because of their market share gain, which they are doing from the traditional companies. And this is one slide which is very relevant, and we have kind of incorporated some of the upcoming IPOs and some of the already IPO'd companies. And if you look at the large chunk of these companies, they are into kind of either into new business models or some form of innovative business models, or are investing significantly higher in terms of the R&D spends. And incrementally, these companies are seeing more and more, kind of acceptance, and the new age listings are kind of becoming much more kind of important. And we are of the view that some of these companies, I think the important point also to highlight is not only that these companies are coming to the stock market. The important point to highlight is that these companies in their respective fields are market leaders in their own domains. And the unit economics of some of these companies in terms of the profitability also is pretty good. So the reported profitability may not be that great, but the unit economics, as we call it, is very good. And some of these companies are kind of set to further gain market share going forward as well, and hence will become a significant part of the larger index in the next 5 to 10 years. Moving on, and why we believe that India is at the inflection point of rise in innovation, and why we believe that the core capability and the core infrastructure which is required, which is important from overall innovation point of view, already exist in the country. And we as a country, we are at a cusp of of an era which will lead to multiple kind of areas, which will lead to multiple areas of innovation, and that is something which will lift the growth of the country for the next 2 decades. So if you look at in the last 10 years, and I think even Sandeep in his opening remark alluded to this fact, the global innovation index, which is again something which is widely tracked, and it is one of the very important parameter for a particular country. India has risen from 81st rank to 39th rank in the last 10 years or so, which is a massive kind of an achievement for a country of the size of India. And that has helped clearly a lot of funding to come to India. And this has the improvement is on account of multiple factors, which includes a significant kind of a intervention from the government side as well. For government has created a kind of a ecosystem in the country which is very very suitable, very amenable for innovation as a overall ecosystem to kind of develop. And India has done well in terms of, apart from the government intervention, I think the overall tech capability which India had, because of, multiple decades of experience in the tech side, that is also something which is coming into play overall. So if you look at India in terms of the tech talent is second only to US, and this we are talking about a very specialized tech talent, and very few countries in the world has this kind of a tech talent, overall. Also in terms of the STEM graduates, which is basically your the science, technology, engineering, and mathematics graduates. The number of STEM graduates which come out every year is highest for India, which again augurs very good from a longer term talent perspective. Similarly, if I think the most important point of this slide is on the right hand side. What we are trying to say out here is that, if you look at the adjusted salaries, the purchasing power adjusted salaries in India has been rising over the last many years. And now, the Indians adjusted salaries, especially at the higher skilled worker levels, are not significantly different compared to what it is there in US. And that augurs very that augurs very good from talent retention point of view. And also, the entire geopolitical challenge, which the challenges on the geopolitical side which exists today, I think that is also something which cannot be ignored. And from an economic standing point of view and the kind of overall ability to kind of retain talent and the kind of large businesses which are now getting created in the country, from that opportunity point of view, I think India presents a very kind of a unique opportunity from for the talent, for the tech talent which is there in India, to get retained. And the retention levels can go high going forward, looking at all of these issues, and looking at all of these development. And that augurs, again, that augurs very very good from an overall talent perspective. This slide talks about some of the overall funding environment in the last 10 years has been very good, not only from the public market funding perspective, but also on the private side. If you look at both the venture capital and the overall private equity funding has been very strong in the last 10 years, which has helped to create the startup ecosystem, the fruits of which we are seeing now in terms of the number of companies which are now coming in the public market, and we are seeing all of that. But I think the base and the real kind of seeding happened through some of these private funding, venture capital funding, and the private equity funding in the last 10 to 15 years. And Lastly, on the overall, contribution from the government side, I think it's government in India has been, kind of been very, very instrumental in, kind of providing some of the critical infrastructure, digital infrastructure, which has helped the overall startup ecosystem in the last 10 to 15 years. And we all have heard about Jam Trinity. Aadhaar was, one of the first ones. Then came UPI, and in the last 2 to 3 years, ONDC has been one of the key digital infrastructure which was being kind of developed by the government and introduced by the government, and all of these combined have helped the overall digital infrastructure in the country, creating a very suitable and environment, kind of amenable environment for innovation in the country. And this slide also talks about some of the major initiatives which are taken by the government today. Will not go through each of the initiatives, but important to highlight that some of the initiatives like Atal Innovation Mission are very deep, are very deep in nature, and are kind of doing a lot of wonderful, kind of work at a very grassroots level, which is something which is very, very encouraging from a longer term innovation environment build up point of view. All of these, kind of innovation, all of these initiatives from the government side put together is somewhere close to around 1 lakh crore in total, kind of an investment which the government does, including the PLI in the various, kind of startup areas and new emerging areas. That was broadly on the overall, ecosystem and how the country is faring. Now, we'll talk about the fund itself. And The idea here is, this fund is, we employ a flexi cap kind of an approach, as in there is no restriction in terms of the market cap. And the benchmark is Nifty 500. But the idea is to invest into companies which are, basically innovators, and which are basically leaders in the technology, in which are introducing new business models, and are in, kind of over indexed in terms of R&D spends in their own respective areas. And these companies are typically gaining market share, and hence the growth rates are higher compared to the index level growth rates. And basically in terms of the valuations, the valuations are looked primarily from a medium to longer term perspective, where we look at the total addressable market of the industry the company operates in, and also we look at the unit economics, and based on that we decide on a, kind of and also we look at the market share kind of a trajectory, and based on that we decide on a steady state profitability, and the valuations. We are clearly supported by a very strong research team which is there at HDFC AMC, and specifically for this kind of a fund where one has to be ahead of the curve. A very strong and large research team. This slide we also highlighted during the NFO presentations, and the thought process remains the same. We have kind of scored the number of companies based on various parameters, and the eligible universe is close to around 235 companies out of total 2,500 odd companies which are there, in the listed universe. And the sectors where broadly we are investing are pharma, and then second is auto ancillary, e-commerce, new age companies, industrials, which are basically capital goods, defense, etc. Information technology, and chemicals, utilities, powers, financial services is, in terms of the weightage is lower, because we are not, some of the larger banks are not qualified out here. And then there are other sectors. And I think the idea out here is again to look at the set of the companies which are again over indexed in terms of the overall R&D spends, and also have a different kind of a business model. We keep on evaluating new companies, as in the new IPO companies, etc. And also the universe gets evaluated after a certain period of time. So this is a continuous process, but important to highlight that we have a process, to filter out the companies which gets into the fund. These are the current, the top 10 investments and the top 10 sectors. If you look at it, and the fund performance, it's still early days, but the fund performance till now, till 30th of September, I'm sorry. And these are the some of the key investments. So yeah, so broadly, the key summary of the presentation, as the key summary out here is that innovation are basically the are of three broad types. The product, process, and business model innovation. In the economic leadership, economic prosperity and market leadership are clearly some of the the final destination. But at the end of the day, innovation is the key route through which countries and companies have attained economic prosperity and market leadership. And From India point of view, from the country point of view, we are at a cusp of an era which can lead us into multiple areas of innovation. The areas, or the key reasons why we are confident about this particular thing is one, we have, in terms of the talent pool, we are one of the best in the world. And Also in terms of the overall infrastructure improvement, in terms of the overall innovation global ranking, which I showed it to you. We have improved significantly as a country. A government has kind of put in concerted effort and investment to make sure that we have right kind of digital infrastructure in place, which has helped a lot of startup ecosystem. And also, the overall environment is very very conducive. The some of the initiatives like PLI, etc., is helping a lot of new areas to develop, which is very very important from an innovation point of view. And lastly was on the fund, which I showed. I think, from why invest in the fund, very clearly two, three key points. I think the number one point is that these companies are gaining market share, and the earnings growth of these companies are ahead when you look at from a 3 to 5 years perspective. So in the next 5 years, these companies are expected to grow significantly ahead of the benchmarks, And similarly, if somebody has a longer term horizon, if you look at the examples of US and look at the examples of China, and not only these two countries, across the world, these innovative companies have been the wealth generators. So very important from a investor point of view, that you invest in a set of companies which will be the leaders of tomorrow, which are gaining market share. So that is point number one, from an overall space point of view. And number two, I believe that the number of new companies which are coming are disproportionately or much higher compared to what we saw in the last, let's say, 15 years or 20 years. Number of new companies are again, which are coming to the market, are the companies which have adopted new technologies and are again demonstrated that these new technologies and the investment into R&D, investment into the new business models, have led to significant market share gains. And these companies can become a large part of respective indexes, respective indices going forward. So again, from a positioning point of view, that becomes very, very important. Third, I believe that this kind of a investment requires, and this kind of a fund requires a very, very strong and a very high kind of experienced research team, which we have at HDFC AMC, and that is very critical from an innovation fund as a space category, because these technologies or these kind of cycles of innovation are shrinking, and one needs to be ahead of the curve in when we are investing in some of these new technologies. And that is the third point, but probably one of the most important point. So these are, again, three important points from an overall why invest in HDFC Innovation Fund point of view. And these are some of the risks which are more to do with the macro environment point of view. But one of the macro environment, which is again lower cost of equity and lower interest rate, and that cycle we are starting to see across the world. In India, we already saw 100 basis point of interest rate cut in the last 9 months or so. In US also, we are starting to see that to happen. One 25 basis point already has been done, and there are expectations that in the next 12 months more interest rate cut can happen. That augurs well for some of these long tail, some of these high growth long tail companies from a valuation point of view. So that also is something which is a positive point from an overall investment into this category point of view. Uh, and yes, so broadly, I'm done with the presentation. Thank you very much for patiently listening.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.